Hi traders, this is Forex James, and in this video episode, I wanted to talk to you guys about using limit orders for entries, buy limit or sell limit, which means getting better prices for our trades. I often use limit orders for my trades and not just enter the market immediately. In most cases, the orders would have been filled and I would have gotten in at a better price. Of course, there are situations where you have to just jump in when you see a setup right away. But other than that, most of the time I use limit orders. For me, if you were to take a real life example, it's like going to a retail store and seeing what's the price of an item on the market and essentially telling the owner that, oh, you'll buy it if the price dips lower at a certain price, at a better price. Okay, so it's basically just a discounted price. With better pricing, the distance between my entry and stop loss would be smaller, and therefore the risk to reward would also be better. With that being said, there are still pros and cons of using limit orders. So let's break down what I think are the pros and cons. Let's start talking about the pros first. So number one, better discounted price, better for risk to reward. Right? So here's what I mean here. In this chart, for example, on the dollar yen, I see a setup for going long with seeing this bounce off this range. Okay. So what I did was, after price showed that it bounced off this demand level, off this support, I waited for price to retrace. Okay, because the first thing I look for in any trade is a stop loss. All right. So I don't want to be the first to jump in or be the last. It's gonna be too late, right? So what happened is I waited for a move to play out, and I simply wait for a pullback. Okay, and that would have gotten me filled somewhere here. So this is better pricing than if you had just entered, for example, on this trendline break. Although it's not wrong if you choose to, but for me personally, I would just wait a little more, be a little patient. Of course, potentially missing out on the move, but essentially being able to get a better price and a tighter stop loss will let me have a better reward for my risk. Right? Let's take a look at another example of number one. Okay, still in the dollar yen. This is a trade that I took in one of my other accounts. So basically, I've been looking for shorts here. Let me straighten it out for you. Okay, whatever. So I've been looking for shorts, and I was looking to enter the market to go short. Okay. I did not use a limit order and just simply wait for price to approach it, but instead I like to see price confirmation. So this was the initial turning point. All right, price went down, but seeing this big move, this big bullish candle where buyers just jumped in, I know that there will be another push to the upside. All right, so what triggered me to the trade was this candle here in the H4. I like to use long wick candles for my trigger. Okay, so after this candle closes, this is my trigger to go short with stop loss just above here. However, I decided to use a limit order and enter on a retrace. instead of just this candle close. All right. So wait for price to give me just a slight pullback. Doesn't matter how many pips, but essentially it's still better price. Okay. So I got in somewhere on the wick. And for this trade, I just took a simple 2-to-1, which I exited somewhere around here, I believe. Okay, so that's what I meant by getting better discounted prices, and it's better for our risk to reward. Here's another example of a live trade I took. So this is on the Aussie Kiwi. As you can see here, this is an entry point where I entered, and the exit and the stop loss initially. This is the initial stop loss. It was, I moved it, but it was initially below this point. So let's zoom in here. I basically waited for the turn to happen. Right? See, price made a fake out, a new low. It just bounced. I knew that it was going to go to the upside. So instead of just jumping on a candle here or this close or this candle is close, I decided to wait, and I entered on the pullback. I simply just placed the limit order, wait for price to fetch it, and I was in. Number 2 of the pros is that you'll be able to get into spikes and quick moves that may be impossible to capture with a market order. Here is a chart of the euro pound. Okay, this was a trade I placed earlier on. So the analysis was that we're in a range here. All right, and I had a bullish bias to the upside, and I'm seeing this spot, this area here, basically. Let me just delete this as a PRZ. So when I saw this is definitely a pullback area and a retracement where I could just re-enter for a long. So seeing this range here forms, all right, when price was probably in this candle here, I placed a limit order here. I don't think this is news driven, but price was just moving rather quickly. And with the limit order, I was able to get in. Stop loss below this point as usual, and I just aim for a quick 2-to-1 at the top of the range. All right, so if you had waited for this candle to close, you would have missed out. It's more clear on the H1. See this long wick? So yeah, we were able to get in before this candle even closes, if you're looking at the H1 to enter. Here's another example on the pound Aussie on the H4. This wasn't one of my trades. I did not get into this trade, but let's just talk about this candle here. Okay, this is see how price just spiked down to hit the bottom of the range and quickly rose to the upside. If I had placed a limit order, it would have been somewhere around here. Okay, with the market order, if you're someone who waits for candle to close, you'll miss out on this move. And point number 3 of why I like to use limit order is because it forces you to wait and be patient before you get filled. No impulsive trading by entering on a market order. Sometimes the market would just tempt us with huge candles like this. All right. Number 3 here is more for psychological reasons. Okay. Sometimes as a trader, we often get tempted when we see big moves like this, and we are just afraid of missing out on the move. Okay. By using a limit order, it forces you to wait and not just enter on the impulse, which is not good at all for a trader. Okay. This is a good example here. This is actually a kind of a fake breakout. If you had entered here, you're probably fooled by the big boys. See, this is like the peak of the move. False move to the upside. Lots of people are trapped here thinking that it's gonna go up. Okay, but essentially the market went down. So if you had waited on a pullback, for example, you may still be able to enter here. Perhaps on this retest right here, and there's still some money to be made here, okay? Instead of just jumping in. So basically number 3 is like waiting for a retest or a pullback by using a limit order instead of just using a market order to jump in with the herd of losing traders. And now let's cover the cons of using limit orders for entries. Like everything else, there's always pros and cons, and it's only fair that we look at what I think are the disadvantages as well. Okay, let's look at number 1. Missed out on a move that don't retrace. Okay, this happens usually on V-shaped reversals. Let me see if I can pull out an example here. Right here. So I'm comparing this to my entry method that I explained for point number 1, which is essentially waiting for moves to happen and waiting for the pullback. Okay, so this is the trigger. This big candle is the trigger. And if I had used the limit order, I would place a limit order somewhere around here. And I wouldn't get filled in this situation here. So I would just miss out on the move, right? If you had just entered the market order, you would be filled immediately. And here's another one here. This is a turning point to go for the market to go short again. And this long wick candle is extremely bearish. And if I had just waited for a pullback to get better pricing and a tighter stop loss, I would probably miss out on this move. Right? So you may miss out on moves that don't retrace. A strong move, a V-shaped move. And number 2 is that we don't know when to call tops and bottoms and how actually price would approach the limit entry. Number 2 and 3 are correlated. They're linked together, okay? So here's what I mean. If you're a more aggressive trader, which I am sometimes, I would be looking for shorts here in this example here, okay? See, this is a daily chart, okay? And this is a really good supply level, right? Imagine we can't see this candle yet. This is the last candle we see here, all right? I may have just decided to place a sell limit order here, right on the bottom of this rectangle with my stop loss above here, because seeing this move, direction will still be to the downside. Okay, with the limit entry, however, seeing this candle here, this is definitely not time to get short yet. With the limit entry, you may not see this candle form yet, and your order may have been placed already and been triggered. That's what I meant, okay? So, of course, price made another push to the upside, takes out all the stops here before finally going to the downside. So this is what I meant by not being able to see the approach of the market, and we don't know when to call tops and bottoms. Because essentially I'm calling this the top here with my stop loss right there. Alright, and you get stopped out. Let's take a look at another example. Okay, here's a good one here. This right here is a strong supply zone, supply area or resistance. Okay, if you had a short bias, you may think that this is a good place for entry. If you had placed your limit order too early in the game, and not seeing this approach here of this huge candle, it would have probably been stopped out because price did make a new high. Okay, so it's important for me to always wait for price action to tell me how the market is doing, if the bulls or the bears are indeed in charge of the market. With this kind of move here, you wouldn't want to stand in the way. So with a limit order, one may have just gotten short here at this level, okay, and place the stop loss just beyond this point here, and in that case that'd be stopped out. All right, so these are the times when I think you shouldn't be using limit orders for entries. Okay, so I've covered the pros and cons of using limit orders. I hope you find this video useful and you can apply them to your own trading. Let me know if you have a preference for the type of entry to get into the market. Don't forget to give me a thumbs up if you like the video. Thanks, guys.